Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review, recording this right around noontime, actually, on Friday, December 8th. My thoughts could pretty much be cut and paste from last week's video. Intermediate term, the evidence remains, not uniformly bullish, but pretty close. The trends of the major indexes, the action of the broad market, the number of new lows, the trend of interest rates, and really probably the most important thing to me, always, but especially right in this part of the cycle, is the action of leading stocks. We've seen a few wobbles, some consolidation, but as I'll show you, when I say most, I mean like 99% of what I see is very tight, controlled. Maybe there's a one-day shakeout on some news or a downgrade, but the stocks are handling themselves well, okay? Short term, we'll see. We're seeing a little churning in the market up at these levels. We're seeing kind of some rotation on a day-to-day or every couple-day basis. The Qs, the NASDAQ 100, I should say, is down for a couple days, and small caps are up. And then, small caps sell off, but everyone buys Apple or whatever. So we're seeing a little bit of that sort of action. And again, we're still seeing some of these junky stocks move. It's only been a week or two, so sometimes these things can run for, 4 or 5 weeks. But it is a sign that the juices are flowing. And, the question that I get often is like, hey, what's different from this rally and past rallies we've seen in the last couple of years? And I'll get into that. One is interest rates and the other is a lot of positive earnings gaps, especially among growth stocks. But, we'll have to see how it portrays. I'm optimistic that we can, we've started a really sustained trend, but I wouldn't say it's proven at this point. We still need to see the market improve week by week, month by month. So overall, I'm still positive because most of the evidence is positive. At the same time, short term, just being a little bit more discerning on the buy side. I'm not selling my best stocks. I'm not anticipating a decline. I'm not hedging in a huge way, but I'm also not buying something that, just ran up, 30% in the last 3 weeks and is sticking straight up in the air sort of thing. Okay. In Cabot Growth Investors model portfolio, we had an old, not old, but smaller position in an oil stock. Actually, just couldn't hold support. Sold that, bought, averaged up in another name that actually we just started last week. We're still a little over a third in cash. I think we'll be putting some of that to work here, I think, in the next couple of days, trading days anyway, most likely. But still kind of picking spots, ideally looking for pullbacks or some tightness. Maybe if the market can, shake out a little bit, wouldn't be the worst thing. So overall, bullish, looking to put money to work. Short term, though, got my antenna up just to see how things develop, okay? All right, let's hop in the charts as usual. I'm using a program called MarketSmith. You can learn more at marketsmith.com. It is a product of Investors Business Daily. The NASDAQ is kind of a classic example of what I'm talking about. Intermediate term, the index here is still, a couple hundred points above even its 25-day moving average, which to us is kind of shorter term. It's well above the 50-day line down here, okay? And it really hasn't given up really any of its move, right? I mean, it's just kind of chopping sideways. At the same time, it's kind of chopping sideways. It's kind of hitting some resistance up here. I mean, very short-term stuff. It's kind of churning a little bit is kind of a better way to think of it. So it's sort of like, okay, are we going to, dip in here, fill this gap, chop sideways a little bit longer? If some good, bad news comes out in the market, whatever that means, is a lot of good news discounted type thing. So let's see how it plays out. Same sort of thing with the S&P 500, kind of back up to its high, hasn't gone down, still well above moving averages, but kind of churning in here a little bit. Okay. We have seen a little bit just in the very, very short term, a little bit better action. Like this is IWM, small caps and mid caps. Those, like the broad market has been a little bit better, but even them, it's been up and down a little bit here. This week anyway, I think they were much stronger. Obviously, I think this was last Friday. It was a huge day for the broad market. Okay, New York Composite, same sort of thing. So intermediate term, trend is up. Shorter term, a little bit iffier. I would say, not to ping pong back and forth saying yes, but, I do like the action. This is the ARK fund, which again, it's not a perfect match for growth stocks because it is what it is. But in the this current run, it is outperformed the NASDAQ. I mean, it actually hit a new high earlier today, seems to be reversing a little bit. The IPO fund, same sort of thing. Some of this growth stuff. This is the IBD 50 index. Obviously, it's proprietary to Investors Business Daily, but it's high relative strength, high earnings growth, those sorts of stocks, which is the, ocean that I fish in, so to speak. So pulled back a little bit. It's not updated until after the close, but pulled back, 3 days. But overall, you can see very modest pullback. Even the mutual fund index, which is an index of real money, mutual funds, growth funds, same thing, intermediate term, fine, and stronger than, when I say stronger than, it hasn't been chopping sideways here for the past 3 weeks. It actually really has been outperforming a little bit until the last couple of days. So I do like that fact and stuff like that. I do just think in the short term, there's no question you're starting to see a little bit of churning action, and if the Nasdaq is going to pull back or the S&P is going to pull back, it's probably not. I don't mean every day, but it's probably going to pull in some things. So that's just what I'm watching here in the short term. The other thing too is just that this is not a perfect example, but this is Wayfair, which is symbol W, and this is when I talk about junk stocks. It doesn't mean I order from Wayfair, but it's just the stock was 300 down to 30. It's just kind of losing money and all this stuff. You can just see the stock. It's really more of a trading stock. It's not like a ton of it's some leading stock or anything. But you can just see like these spikes, which might not look like much, but this went from 45 to 75 in 3 weeks. This went from 30 to say 75 in 5 weeks. This went from 34 to 90 in 2 months, whatever. But when these big rallies sort of end, and then of course the stock just collapses in on itself again, they tend to happen near market peaks. Okay, it's not like it peaks and then consolidates in here; it just implodes again. Now this is just one stock, and right here, right now, you can see it's not extreme at this point. In fact, it's down this week, but we're starting to see stocks like Robinhood. Again, you just get these sort of spikes in here that have tended to happen near market peaks. Beyond Meat, the stock's a $6 stock down from 200 or whatever the hell it was. So you're starting to see some of this junk action in here. GameStop is the ultimate, meme stock. If it continued for another week or two, especially with the indexes churning, it's just a little bit of a short-term sign of the juices are flowing, so to speak. So it's not a bad thing, but it is something that you put on your radar saying, okay, if all the junk is getting going and all the traders are in there trying to make, 15% and talking on Reddit or whatever, that usually doesn't happen like in the first inning of a short-term move. It usually happens after. So it's just something I'm watching, and is another reason why I'm sort of taking it easy here and seeing, let's just see how it plays out. I'm not saying we're not buying it all. We'll probably put some money to work, but just looking a little bit more for, better entry points and really focusing on the top stocks, not just chasing something that's, looking good on earnings, okay, overall. Okay, now in terms of names, the good news, like I said, I think at the outset here, is when you're looking at the leadership stocks so far, with very, very, very little exception, and even the exceptions are with stocks that are really ran all through the summer, so they've been up 6 or 7 months. The pullbacks to me have been very cool, calm, and collected. This is DataDog, which these next three are kind of like former leaders, that came down, they bottomed out, but they could try to lead again here. Good numbers and good sponsorship. So Datadog gapped on earnings here, ran up basically to its old high, a little bit above there, but basically to its old high. And now it's pulled back in here, and it's pulled back, 8 points or whatever, but it's still above the 25-day line, well above the 50-day line. Could easily digest for a while, but looks normal. Cloudflare, same sort of thing. Of course, it's bottomed out forever. Nice persistent move here. 80 going back some ways. 80's a little bit of resistance, and again, I guess it's sort of churning in here, but again, it's not really pulling back much yet. You haven't seen much. It's not like there's been big volume on the downside. That looks pretty good. Shopify. These aren't really I do like Cloudflare, but they're not like my super cup of tea. I'd rather have something fresher. But Shopify, big gap, actually made it above the prior high here by a little bit, and it's kind of churned in here, but not much selling, you know what I mean? And just kind of hanging in there and retaining the vast, vast majority, right, of this big move. So that's kind of what I'm seeing. And that's why at this point, and we come in next week and, Shopify gaps down here and the Nasdaq's down 300 points on Monday or something like that. Okay, I'll change my tune. But until I see it right now, it's kind of like, it certainly doesn't seem like Fidelity and T. Rowe Price are eager to unload shares of these stocks, So that looks pretty good. And just moving through a bunch of different names. A lot of these are kind of setups here. So this is Eli Lilly. It's on my watch list. It's not something I'm really intrigued by here. You can see it's been underperforming. This is the market. Let's see, this is when the market got going right here. So just net on this RP line, it's been underperforming the market. But so maybe it's all the weight loss stuff is discounted is what I'm trying to say. But it's very, very tight in here. Yes, it's Eli Lilly. Yes, it's a $600 stock. But you can see it's moved, okay? And it's very tight in there. So to me, it's just like, can the stock, is it playing possum? Everyone's focusing on whatever, tech stocks and software or whatever, home builders, and can this get going? If it does, I think that would be kind of interesting. NVDA, I mentioned this just because it's in the news. It's had this pullback. Honestly, it looks fine to me. Again, it's sort of like Lilly. It hasn't really outperformed that much, if at all, during this rally. But big picture, it had this obviously huge run, and it's just been going 400 to 500. I would say if it really broke, I'm not going to give a specific level, but I mean, if the stock's down here, probably not good for chip stocks, probably not good for NVIDIA, chip stocks, or the NASDAQ, okay? But I would just say that overall, if the stock can really break out, I mean, it certainly looks like a regular launching pad, and you can't beat the numbers and stuff like that. So something to watch. I've mentioned the past home builders and stuff. We're seeing supply stocks too. This is AZEK, AZEK. There's a bunch of them. It's kind of like, what do you do with this? I mean, it's just straight down, then straight back up. But now you're starting to see this is a nice reaction to earnings in here. But now, again, you're just seeing this sort of lack of pullback. It could easily pull back, a point or two. But so far, there's been no ability to pull, or no desire, I should say, to pull back, as it's just kind of sitting at its highs, kind of like the Datadogs and all that. So even though it's a totally different group, very similar action. GitLab, I mentioned last week, it did gap on earnings. It was kind of a breakout. And there was almost 10 times average volume on the breakout, which is kind of a clue. It was a little short, but so it's pulling back in here. We'll see. Maybe the breakout fails. I would say breakouts at this point are not that they can't work like Lilly, but if a stock's already been going up and it kind of bases out and breaks out like an NVIDIA, that's one thing. But if a stock is really sort of still in this bottoming area and then now tries to break out, I'm not saying it's too late. Just it might not be the number one play. So far GitLab looks pretty good. I do like the story here. So I'm sort of talking out of both sides of my mouth. TMDX, this is Transmedics. This is kind of interesting. We've seen a couple of plays like this. Normally I would never, and this is a higher risk thing, but we've seen some of these where these stocks just got killed because small caps were getting killed, because there was no sponsorship, because the market was bearish. And then they report earnings and it's like a totally different stock. So the stock gaps up on this huge day of volume. And since then it's just acted very normally. I mean, now maybe it pulls in here, but today there's no volume. So there's overhead here, don't get me wrong, but it's just sort of a smaller cap name. It's definitely a smaller cap name with a great story and great sales growth, triple-digit sales growth. And let's just see how it handles itself after, almost doubling off its lows, okay? Cybersecurity remains strong. So this is Zscaler. Some round number resistance here at 200. But again, it's churning, but no big selling really, and just kind of hanging tight. The longer it can kind of hold up, generally speaking, unless if a stock's been running for 4 months and it holds up, well, that could start being toppy. But if a stock thrusts out of like a consolidation, basically, and then the longer it can hold up, generally speaking, the greater the chance that it wants to go higher, just because, nobody's taking profits yet. So we'll see how it goes. This one's a smaller one, but Sentinel-1 is in the cybersecurity group. It's one of these IPOs that got destroyed, bottomed out, of course, endlessly. And then I'm just mentioning it because it did react well to earnings here. I guess that was Wednesday, and it's holding up pretty well, okay? Vertiv, we've mentioned this a bunch, and this is VRT. This is, AI play, cooling solutions for data centers. So it had this pretty much unbelievable run here to 40. And then it basically did nothing here for 3 months. It's probably easier to see on the daily chart. Just net, right? It kind of, even on this shakeout as of a few days ago, it basically hadn't really done much for 3 months. Now it's starting to get its sea legs. You can see the volume kick in. They had an investor day. I don't know if volume's going to be there today, but new RP peak. It looks like it's kind of extending its legs. It's not going to do this again. Well, I don't think it's going to do that again, but overall it looks pretty good. Just a couple others. DoorDash. This was another one that kind of just, not like Transmedics that bad, but it's just sort of down, huge earnings gap on really right out of the chute when the market got going. Had a little bit of a wobble, but as long as you use proper stuff. So now it's at $100. round number resistance. Maybe it pulls back, but just a name that I like to watch. And another thing I'm just seeing, this is, do with it what you want. But, a lot of Israel stocks understandably got hit, at war and stuff like that. We're seeing some of them pop back here. They have reported earnings. They've kind of said what the deal is, how many of their, employees are fighting in the war and stuff like that. This is MBLY. It's always had a great story, autonomous driving, ADAS, stuff like that. It's had this endless base. It is like 90% owned by Intel. So, it's almost like there is some overhead out there. But it is starting to perk up here, and they usually release some numbers late in the year, early the following year. So let's see what happens. It's just something, it's on my watch list. It's really on my back burner watch list, just keeping a distant eye on it. If they have some good news and the stock can really explode higher on big volume, it is the kind of, there's only 351 shares in there, but it's a big market cap. It's a big story. It's the leader, that sort of thing. So overall, I mean, the vast majority of the evidence is positive. Short term, you can kind of throw some stones at the market if you want, and at some stocks that are starting to pull in. But, overall, I'd be looking to put money to work. I'd have your optimist hat on. I'd be looking to, really not only buy some leaders, but try to hold on to them. Sure, partial profits on the way up, but try to hold on to a chunk. Could the rally fail, Mike? Of course. There's no sure thing in the market. But if this turns out to be the real McCoy, and we do trend for not just the rest of the year, but through April or June, hey, how about that? We have a real bull move. Some of these stocks that are getting going today, not all, but some of them could really run in the future. So give at least some of your positions a chance. In the short term, though, you want to just kind of make sure that the market doesn't keep churning and that some of the stocks here, that you're not buying them too extended. Okay, that's enough for me today. Thanks for listening, and come by again next week for another Cabot Weekly Review.